We've obviously got these headlines kind of punching us in the face, at 5:30 in the morning on a Monday morning as well. I'm not going to ask you to dig into Evergrande Group or who they are, but it kind of shows you that even in a market awash in liquidity with the Fed, there are global macro risks, these sort of black swans that still can pop up.
Yeah, and good morning. Thanks for having me. Look, I think that we were due for a pause. We know that September is very seasonally weak. We do have these concerns about China, not only Evergrande, but what they're doing to the gaming industry, the internet industry. So there's a lot of concern with China and what they're doing and their actions. And again, as I mentioned, we have the seasonal issues to get through. And of course, we still have Delta concerns. There's always concerns, though, Brian, as you know. On the flip side, the economy and the economic data last week was really quite impressive. And I'm really interested to hear what FedEx has to say this week, because they are a global presence and we'll get some data points from them. But I do think the economy here in the States is strong. I think retail sales really, you're 10% above pre-pandemic levels in terms of retail sales. The consumer is good. Manufacturing, you have very lean inventories. Industrial production is only 2% below pre-pandemic levels. So I like what I'm seeing on the economic front. And by the way, we have these concerns, and we're up 18% year to date in the S&P. So it wouldn't surprise me to see a bit of a pullback. But let's look for some stock ideas.
Let's do that, because you talked about the economy, Stephanie. I spent the weekend in Wisconsin. I didn't walk there. I flew. Flight was sold out. Airports were packed. Hour-long waits for restaurants in Wisconsin. It was just whatever you think of it, people are out and about. 30-day tags, all these new cars everywhere. Expedia is one of your special picks to kick off our series. Why?
Yes, it's an absolute reopen names. You just mentioned it. It's flights, it's cars, it's cruises. It's lagged the market year to date, only up 15%. Second quarter bookings, Brian, were up 32%. So the visibility is very, very good. They're taking share in Vrbo, and they have a cost savings program. They're cutting costs, margins are going higher, and that's going to lead to free cash flow, maybe something like $2 billion in free cash flow, and I think they could use that to buy back some stock.
Another name, and maybe this may be, by the way, Stephanie, the biggest financial services company that we never talk about. In fact, the only time I think I ever mention it is when we talk about where the New Jersey Devils play hockey. Prudential, PRU, totally new management, kind of trying to reinvent themselves. Why do you like this rather quiet giant?
It is a quiet giant. I kind of like that too, right? So yes, you said it. It's fairly new management, and they are shrinking to grow the company. They have asset sales, and they are also focusing on growth areas like emerging markets and asset management. And last week, they sold 17% of their variable annuity book for $2.2 billion. I think they're going to use that to buy back stock, reduce debt, maybe do some M&A. It's 3 to 4% accretive to the company over the next 2 years. And if you think rates are going higher, which I do, ultimately, they will benefit. And oh, by the way, it trades at 8 times earnings, and you get a 4.5% dividend yield while you wait for the recovery.
And Cisco, not the food services company you might use to buy food at the Prudential Center, but Cisco Networks, CSCO, another name you like to kick off our special. See what I did there, Stephanie? Just kind of linked it.
I see what you did. You tied it all together. You tied everything together.
I linked it anyway.
Oh, my goodness. I need more caffeine. Yeah, Cisco's a great story. Enterprise spend recovery story with very good visibility. Bookings up 41% in the last quarter. And they had a great, solid analyst day where they reiterated all their financial targets. 2.6% dividend yield, trades at a 20% discount to the market.